the year coming to a close, 2016 will definitely be considered one of the most surprising politically, and financial markets reacting to the news. Since the presidential election, the S&P is up close to 6%. So what will 2017 have in store? We're talking outlooks with the Streets correspondent, Scott Gamm. Scott, good to have you in studio.
Good to see you.
So I know you've been attending many outlooks and forecasts. So what are the experts saying? What can we expect as we're about to start this new year?
Well, look, I mean, this Trump rally since the election has been incredible, right? And many strategists expect that growth to continue into 2017, largely on the heels of two factors, right? Infrastructure spending, tax cuts. Now, is the market getting a little ahead of itself in the sense that they're a little bit optimistic of the timeline of these two things? The markets are essentially acting as if these two factors are with us now. The reality is it's going to take time to get those tax cuts passed and to get that infrastructure spending trickled down throughout the rest of the economy, even though Republicans control the government now.
Right, so we necessarily wouldn't feel that in Q1 or Q2.
Exactly.
Okay, so let's look at one of the forecasts I know you covered, Bank of America. Now, this one surprised me because they said the S&P 500 could head to 2,700 or dip to 1,600 in 2017. So really two diverging views here. What's behind that?
Well, there was a lot behind it. And let's be clear, Bank of America expects the S&P 500 to reach 2,300 by the end of 2017. But like you said, there were two bull and bear cases, right? 1,600, and that is if we don't get Trump's tax cuts, his infrastructure spending. That's if we get some of his more protectionist policies, the trade wars, maybe some stagflation. On the flip side, the bull case of 2,700, that's, of course, if we get those infrastructure spending, the tax cuts, and the Fed sort of appeases the markets by not raising interest rates too fast in 2017.
So Scott, does that rule out the R word then? Is there no chance of a recession happening?
Well, Bank of America said that they wouldn't necessarily rule it out completely because look, if we do start to see the policies from Donald Trump that many were worried about, trade wars with China, a more isolationist type of attitude, that could ding growth. The consumer could start to get worried, and that's obviously a recession brewing. But the chances, I would say, are pretty low. I mean, look at where the stock market is now, 2,300 almost in the S&P 500. What I'm really watching for 2017 is if we get capital that companies are holding overseas, and we're talking about trillions of dollars of capital, if that comes back to the U.S., even if it's with share buybacks, that'll still help the stock market. And you'd like to think that some of that money goes into investing in the future, not just share buybacks and dividends.
Lots of things to watch out for. Scott Gamm, thanks so much for joining us.
Thank you.
And thanks for watching our Outlook 2017. We'll have much more for you, so be sure to stay tuned.